Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 13th of October 2021 and we're producing our Wednesday morning gold and silver price update, forecast and daily news. Today we see that the United States is reporting inflation data for September, CPI data to be more precise, which could either help today's rise in gold and silver prices, should that data suggest a lower CPI than expected, or cause prices to fall if they're considerably higher. So let's take a look. Welcome to Illuminati Silver. It's Wednesday the 13th of October 2021 at 9:27 a.m. GMT plus 1. The weather today: indeterminable. We see smatterings of blue sky and smatterings of greyish cloud. So we're not quite sure which way the weather is going to move. As we will not be sure as to what the inflation rate or the CPI rate in the United States will be today, which could be quite important for gold and silver prices, and we'll come to that in a few moments. Looking at the headlines today, what's not indeterminable is how Putin sees the European gas crisis. As the headline says, he sees it as Russia's golden opportunity. So taking a quick look at that, fresh from crowing over Europe's gas crisis, Russian President Vladimir Putin now sees a chance to capitalize on it. Putin wants to press the European Union to rewrite some of the rules of its gas market after years of ignoring Moscow's concerns, to tilt them away from spot pricing towards long-term contracts favored by Russia's state-run Gazprom, according to two people with knowledge of the matter. Russia is also seeking rapid certification of the controversial Nord Stream 2 pipeline to Germany to boost gas deliveries, they said. Putin is due to speak at the Russian Energy Week conference on Wednesday. Amid record daily swings of as much as 40% in European gas prices, he made a calculated intervention to cool the market last week by saying Gazprom can boost supplies to help ease shortages. Well, you can't blame him for being opportunistic. However, what's not so good in terms of news, the UK economy grows less than expected in August. But it might be good because vis-a-vis what we discussed yesterday about some central bankers wanting to put interest rates up sooner, perhaps these figures might delay them slightly. The UK economy grew less than expected in August as shoppers reined in spending, raising doubt about whether output will return to pre-pandemic levels this year. GDP, gross domestic product, rose 0.4% in August, the Office for National Statistics said on Wednesday, today. A series of revisions showed an unexpected drop in July, leaving the economy 0.8% smaller than it was when COVID-19 struck in February 2020. The figures add to evidence Britain's recovery is being squeezed by supply shortages and a jump in the cost of goods. That may give the Bank of England reason to delay an increasing interest rates that financial markets anticipate will come this year. So many factors to take into account. You have the jobs market, you have public spending, you have GDP, and a host of other criteria. Talking of stock markets, stocks fluctuate with futures as earnings awaited. European stocks and US equity futures fluctuated as traders await inflation data out of the United States, along with earnings reports that will measure corporate health in an era of rising costs. S&P 500 contracts erased an earlier loss before the US consumers report, while news that the chip shortage may crimp Apple Inc.'s output weighed on sentiment. It's remarkable how the performance of one single company has such a considerable effect over the US markets. European stocks were little changed, as losses on insurers and miners offset gains by tech firms. The US 10-year Treasury yield held below 1.6%, and a gauge of the dollar ticked lower. A rally in oil paused, but crude remains around $80 a barrel amid a global energy crunch. Chinese thermal coal futures hit another record high. Going over to the BBC, we can see plan for Christmas amid port delays, shoppers told, in other words, buy your goods early. UK economy grows on camping and dining out. Hopefully that they're not camping because they've lost their homes. Biggest UK commercial port hit by container logjam. Amazon drivers to sue for compensation over rights. And Apple shares drop on iPhone 13 production fears. In the United States, blogger Gabby Petito strangled to death according to the coroner. US police hunted protesters with rubber bullets. US conservationists, I almost said conversationalists, angry over killed wolf pups. And Al Capone memorabilia sells for $3 million at auction. I think we should be focusing more on economics, quite frankly, but there we go. Reuters still pushing the Evergrande story. Festering Evergrande contagion worries push China spreads to record. Worries over possible spiraling effects of a debt crisis at developer China Evergrande Group drove Chinese high-yield spreads to record highs on Wednesday, days after the company missed another dollar bond deadline. So talking of dollars, well, it's moved down marginally, 0.17, still holding well above 94 at 94.33. Energy prices, pennies change marginally down, $80.50 for WTI crude a barrel, and $83.22 for Brent crude. Equity markets in the US yesterday. The Dow and S&P were down, approximately 0.33%, and the Nasdaq was also down 0.1%. Asia overnight broadly down 1/3 to 1.5% in the case of the Hang Seng, and UK and European marginally mixed, some marginally up and others marginally down. It looks like the equity markets are really waiting to see what's going to happen on the 3rd of November when Jerome Powell talks about tapering. Now, economic data today, quite important, very important in fact. We have the International Monetary Fund, first of all, releasing its fiscal monitor report. That may make, I won't say interesting reading, but certainly noteworthy reading. But key figures today are going to be the Consumer Price Index and core CPI for September. Expected to come in at 0.3%. If it's considerably higher, that may suggest that inflation is getting a little out of control and therefore the bond buying tapering will be introduced quicker and more deep than anticipated, and potentially vice versa. And that, by definition, is likely to have an effect on gold and silver prices, which we shall look at in a moment. We also have the FOMC minutes from the last meeting, which we're not really expecting any surprises because we've also had, since that meeting, the Jackson Hole Summit, or Symposium, as they like to call it, and we've heard from Fed Chair Jerome Powell and other Fed governors at numerous congressional meetings since then as well. So today's going to be quite an interesting day. Gold prices, meanwhile, over the last 24 hours are up. So we're up $8 at $1,768, now quite well above that $1,750 support level. If we can get a bit of a tailwind behind these figures today, we may very well see that rise to $1,780 today. And then, of course, $1,800 will be in the sights, though we're not really expecting huge moves until the 3rd of November. Either way. Silver, also up 17 cents at 22.80, now well above 22.50, and once again, targeting $23. That's a possibility this week. Equally, falling below 22.50 is almost an equal possibility. Cryptocurrencies, down actually over the last 24 hours, down 1.63, but still giving us a market cap of 2.2 trillion. And we have Bitcoin meandering around the $55,000 level. That's it for now. Important data today, but most important data on Friday. Going back to that quickly, we can see we have retail sales, import price index, consumer sentiment index. Thank you for listening. Please give us a thumbs up or a thumbs down. Subscribe, press the bell sign. Have a great day, and let's hope we can see the sun just rising above one of the slightly dark clouds. So who knows, indeterminable may become determinable after all. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.